This is the FCTO Daily Forex News Report for the 29th of April 2013. In Italy, a new government was sworn in on Sunday after 2 months of political deadlock. The government is a broad coalition of the left-wing Democratic Party, Berlusconi's centre-right People of Liberty, and Mario Monti's Civic Choice. The new Prime Minister, Enrico Letta, will present a programme of institutional and economic reforms to the Parliament today. He has also indicated that he will try to get European parties to give Italy more time to reduce its budget deficit. The new government will have to win a confidence vote in both houses, but this does not seem to be a problem. Bank of Italy's governing board member Fabrizio Saccomanni has been appointed as finance minister. In France, the government has apparently changed its mind on capital gains tax and will now present a plan to cut taxes and thus revert the big tax increases introduced last year. Bank of Cyprus has over the weekend converted 37.5% of deposits above €100,000 into equity. An additional 22.5% is held for possible conversion in the future. In Iceland, the two parties that governed the country until 2007 and then lost significantly as they were blamed for the financial crisis, regained majority at this weekend's parliamentary elections. If they form a coalition, they will probably aim to remove capital controls as soon as possible. A 20% across-the-board write-down of mortgages is also on the table. Net income in Chinese industrial companies increased only 5.3% year-on-year in March, down from 17.2% in the first 2 months of the year. The Forex markets opened the week rather steady, with mild weakness in the US dollar, but the loss is so far limited. The more notable move is seen in sterling, with British pound US dollar breaking through the 1.55 handle as last week's GDP triggered rally extends. Sterling has broken near-term resistance against the dollar and the euro, and this strength will likely carry on for a while. But it should also be noted that the pound will face challenges from PMI data this week, including manufacturing PMI on Wednesday, construction PMI on Thursday, as well as services PMI on Friday. Slight improvements are generally expected in all of the three PMIs, but PMI manufacturing and construction are both expected to stay below 50. The pound will need some significant improvements in this data to maintain the current momentum. Another key event to be watched this week is the European Central Bank's meeting, which would be important for the move in the euro-British pound. There's been increasing expectation of a rate cut from the ECB this week from 0.75% to 0.5%. However, it's also argued that the effectiveness of a rate cut is limited, as ECB Executive Board member Asmussen mentioned that transmission mechanism is impaired in parts of the currency area. Some argued that it's more plausible for the ECB to cut in June after getting Q1 GDP in May and new ECB projections in June. And the central bank could indeed opt for alternate measures like securitization of loans to small businesses in this meeting. But in either case, euro-British pound will likely remain pressured for a while. However, outlook in euro-US dollar is rather mixed and will be more dependent on Friday's non-farm payroll from the US. As for today, euro confidence indicators are expected to show a general deterioration in April. Germany will release CPI and the US will release personal income and spending, as well as pending home sales. For all the news affecting the Forex markets throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.